Welcome, dear traders. You are watching a recap of Asian trading on December 25. US and European markets are closed for Christmas and there is no futures trading. Liquidity and volatility are low today as the markets are closed and data from commodity exchanges is absent. Most Asia-Pacific exchanges are not operating on holidays. Currency pairs showed muted trading, with the US dollar remaining under pressure. Investors scrutinized the Bank of Japan governor's speech in subdued holiday trading. The Bank of Japan had said that the central bank may consider changing its monetary policy if wages and prices move in the right direction. In China, the Shanghai Composite Index showed a moderate decline of 0.3%. Since the beginning of the year, the index has lost 6% amid an uneven economic recovery. There are no clear signals to buy Chinese securities, but the result market indicates a high risk of a further downside speculation. The Nikkei gained 126 points in a weak trading over the Christmas holiday, with the gains in most sectors including healthcare, technology and consumer spending. On Monday, the Bank of Japan governor pinpointed that the possibility of achieving the inflation target was gradually increasing. He emphasized that the regulator intended to consider a policy change if the prospects for achieving the 2% target on a sustainable basis strengthened sufficiently. Katsueda noted that firms were showing more openness to wage and price increases. The Japanese regulator has yet to set a specific time frame for a change in its loose monetary policy, making it unique among major central banks due to the uncertainty of economic and market conditions. Many market participants expect the Bank of Japan to increase its short-term interest rates and move them out of a negative territory next year. Some are even betting on a rate hike as early as January. At the beginning of the trading week, the US dollar remains under heavy pressure. In the Asian session, the American currency traded in a negative territory, losing 0.13% and maintaining the downward trend. On a Friday, the US dollar index slumped to the level recorded at the end of July. The index tested the 101.40 mark. Since its rally in the autumn, the greenback has lost more than 5%, while the Asian and European currencies strengthened during this period. Since the beginning of this year, the US dollar has weakened by 2%. Given the change in the monetary sentiment and expectations of a Fed rate cut in early 2024, the US currency is likely to continue its decline. The benchmark for the US dollar index stands at the 100 mark. This implies a possible further decline in early 2024. As a result, the euro and the yuan could gain slightly against this backdrop. The yen has been one of the best performers against the US dollar over the past months. Asset managers may continue to hold long positions in the Japanese currency. The bullish shift came amid a growing view that the Bank of Japan could end its out-of-loose policy in 2024, while its major rivals may cut interest rates. The yen remains in a positive territory today, gaining 0.3% in the Asian session. The Japanese currency has the potential to remain strong until the end of the year. If the dollar-yen pair declines, a break below the December 14 low of 141 will lead to a move towards the 139.40 mark. This is followed by the July 28 low near 138. An alternative scenario suggests a rise above the December 19 high to around 145, and this would take the pair to the December 11 high at 146.60, followed by the December 6 high at 148. The Aussie dollar pair corrected lower on Monday in the absence of market drivers due to the Christmas holidays. On a Friday, the US session saw the pair reach its highest intraday level since July at 0.6824. This was aided by widespread dollar weakness. Meanwhile, the pair remains in an ascending channel, approaching the upper boundary, which could potentially limit the rally and trigger consolidation. At the same time, a break above the upper boundary at a 0.6830 could trigger an uptrend to be the target of a 0.6850. If the pair starts a downward correction, the 0.6770 level may offer support, followed by 0.6725. A break below 0.6600 is likely to change the outlook from a bullish to neutral. The Kiwi dollar pair may have stayed in the green during Monday's Asian trading session, but the bullish momentum from the end of the week has faded. On a Friday, the New Zealand dollar bounced back to the 0.6300 level, and the currency will continue to outperform the US dollar as the Reserve Bank of New Zealand is expected to keep interest rates high for an extended period. The pair may see a new surge after another break above the 0.6300 level, allowing bulls to reach the 5 months high at a 0.6350, and should the uptrend continue, the pair may test the July 14 high of a 0.6400. Falling to 0.6168, the pair could plummet deeper to the November 30 low of a 0.6121, followed by the December 13 low of a 0.6084. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you online soon.